Hey guys, Mike here. So obviously big green day in the market, big bounce back. And I don't know about you, but I feel like I've kind of seen this movie before. So I'm going to show you, something very similar that happened in February and in January, 24 to 48 hours before we had the inflation data release, which of course we're getting tomorrow. And we're going to see what you think about that. And also, I ran across this article this morning, which I think you'll like, and I actually want to get your opinion on because it was talking about, everybody's talking about when's the market going to turn around, and because it always does, right? We always go on these runs. And so, this article made a lot of sense. It's entitled 5 Things Needed to Happen Before the Market Turns Around. And so, some I agree with, you'll see, and some I disagree with, but I want to get your thoughts in the comments on, have you seen any of these happen already? Because I actually have. And do you think we actually need the other ones? Because remember, what's the stock market do? It prices in things usually 6 months to 9 months out. And so we may be in all hell right now, but the market's already passed a lot of this stuff. It's already priced a whole lot of stuff in. What I mean by pricing in is it's driven the stocks into the ground, got the valuations way down in order to make that turn. And so, I'm talking about, when I say investors, I mean institutions, right? Because they're the ones buying millions of shares, shorting a lot of these stocks, that kind of stuff. And so I'm going to show you, though, the kind of evidence that might show that this today, whether or not this is like some dead cat bounce, which we've seen before, and I'm going to show you the data and let you make up your mind for yourself. And of course, we'll get to see tomorrow morning when the CPI data is released. Okay. Before we get into that, don't forget, Webull's giving out 5 free stocks for people who open a new account and fund it with any amount of money. The 2 free stocks you get for opening the account are valued anywhere from $300 to $300. The deposit bonus stocks, you get 3 of those, each valued between $7,000 and $3,000. And then on top of that, you get $5 of free crypto if you just activate your Webull crypto and complete 1 crypto trade worth $1 by the night. And you can choose between SHIB, Doge, Bitcoin, ADA, or Ethereum. Link is down in the bottom, guys. Take advantage of that. And if you're getting out of this, hit that like and subscribe button. I really appreciate it. And let's go and get into the 5 things that need to happen before this market actually makes a big turn up. And so the first one they go over is they need improvement in growth stocks. Because right now, the only thing that is really working is risk off assets right now. We need to see a rotation in the small and mid-cap stocks in a large way by institutions, so we stop the downtrend and start moving up into an uptrend. And to me, this is kind of a no-brainer, right? The S&P and the NASDAQ, as I showed you, and I'll show you the chart again at the end here, are in a massive downtrend, okay? They have not broken out of that. Until they do, everything else is just noise. But the other thing about, it's really important about small caps is, small caps are the lifeblood of this country. All right, they can talk about big corporations all they want. There is way more smaller companies than there are these large conglomerates, right? And so when you see institutions start rolling into them, right, then that kind of lets you know what they really think about the economy, right? Because if you keep staying away from them and they keep beating the Russell down, all these small caps just keep getting grinded down, when you don't think they can go any lower, they continue to set all-time new lows. Then that kind of lets you know what the institutions believe is going to happen, because the small caps will definitely be hit hard if we go into a recession or the economy takes a downturn, because they don't have the kind of cash on hand that a Google or a Microsoft has or something like that. And so that's something to keep an eye on. And so, yeah, I agree on that point. Number 2, this is the one I disagree with on, is the Fed has to change their hawkish stance. Obviously, they put a lot of liquidity in the market for a long time here. And my question to you is, and even the author, when has the Fed been hawkish? I mean, you get these guys like Bullard out there running their mouth, and puffing their chest about how hawkish they want to be. And then they go into these meetings and they put their hands in their pockets like good old boys. And they say, yes, sir, Mr. Jerome Powell, whatever you want. And they do nothing, right? And so, I don't understand this hawkish stance he's talking about here. I've never seen it. They have done literally, when I say nothing, literally nothing, to try to help, quell inflation, right? They kept 0 interest rates all the way up to this month, right? They continued to buy, mortgage-backed securities and bonds up to this month, right? And so I don't get the hawkishness. It's just because they finally stopped buying bonds and mortgage-backed securities, and they're going to raise the interest rate 0.25 basis points. Ooh, all of a sudden they're hawkish. I'm like, give me a break. That's ridiculous. What these guys are doing is they're trying to sit back and do nothing, right? And just hope that the supply chains work this out, and then you'll see everything, max out or peak out, and then start inflation come down, and they're hoping things in Ukraine and Russia settle out and everything like that. but they really haven't done anything yet. So yeah, I disagree on that point. I mean, if they get really hawkish, that could have a problem. But as far as I know, I've never seen them hawkish. So let me know in the comments. Maybe I'm wrong, but hadn't seen that. Jerome Powell and the word hawkish in the same sentence doesn't go together unless you're putting the word not in front of the word hawkish. So yeah, that's that one. And number 3, and this one absolutely I agree with them on. Institutional buying has to resume. And what he's referring to is basically institutions have been selling like crazy. The only thing they've been doing is really shorting stocks like a madman. The only thing they've really been buying is commodities and cyclicals, right? That's what they've been going into, energy, things like that. And I like what he says right here when he says, so far all the bounces have been low volume, short covering rallies that you would normally see in a correction. And that is 100% correct, which you can see what he's talking about right here. You see how much the red, the selling volume that is, outweighs the buying volume since the beginning of the year. I mean, it's not even close, right? And if you go back to when, the NASDAQ was in an uptrend, this is what we have to have right here. You can see the selling volume. You see back to back to back to back to back days of stocks moving up on great buying volume. And I should say, when we need to see buying volume, we need to see it in the small caps, in the growth stocks, okay? Not the cyclicals, not gold and silver and all the rest of the commodities, not that stuff. We need to see it in growth stocks and the small cap area. That's where we need to see it in. And so, and not just in FANG stocks either. If we start seeing it in the FANG stocks and the rest of the market isn't coming up, then that's not going to be very good, okay? Because every one of these rallies have been on small volume. All right, you see all the big volumes on the selling days, right? And so on the 4th one, this one I disagree as well. Let me know in the comments what you think about this. Sentiment has to reach extreme bearishness. So he's going on to say that with all the surveys he's looking at, that we just hadn't reached that extreme fear you get when you're getting to a market bottom. But when I look at the fear and greed index, I like to look at, we're at 22% of stocks in the market are in an uptrend, which is not good at all. Less than 75% are, and above their 6-month EMA. And so you can see right here, this fear and greed index has a 22. You can see the only time we really passed the point of this point right here is during crashes, okay, like stock market crashes, I mean. And so, to me, I feel like I don't think there's too much bearishness to have because this is different, right? A crash that we've been through in 08, that we went through in 2020, like those were fast. Like they came on so fast and there was always fear and we didn't know what was going on. And, in 08, we thought the financial system was going to shut down, right? And then in 2020, the world shut down. Well, right now, I think the reason why people aren't in that, oh my God, it's going to zero is because growth stocks and small caps have been getting hammered for months. I mean, months, right? So you already have this crash that's happened in the Russell and in the NASDAQ already. We've already passed 20%. The Russell's passed it multiple times, right? And so the only thing that was working was FANG. And now all of a sudden, now you got commodities and the cyclical is working for you, right? And so it's just, to me, that's why this is a lot different than those times. And so I feel like we've definitely reached a fear level to where you could see a bottom soon. I'll actually show you an indicator that I actually don't like, but I'll show you what this indicator really, to me, signifies more than anything. And so, I think that's why, and plus, like, people have kind of stopped buying the dips. They kind of do, and then they kind of don't. They're more trading the dips now, as you can see. And so I think we've hit that bearish sentiment. Let me know in the comments, whether you're not there or not, or you think we still have farther to go on that sentiment. And the last one here is a resolution with Russia and Ukraine has to be reached in order for the market to start moving up, because that way, oil prices will hopefully stabilize. Because right now, with oil going higher, he's saying food prices are going to go higher and it's going to hit the consumer. And I'm in agreement with him there. But what came out after this article came out this morning was the president of Ukraine even said that, we're not worried about joining NATO anymore, right? Which is really, if somebody let me know in the comments last night when they tried to explain to me what the deal was with Putin invading Ukraine. He said you don't want any NATO countries around, his border or whatever, or there'll be a war, which I guess, like they said, he's a man of his word. He's giving that to try to tell Putin to back off, right? So he's extending an olive branch to Putin per se. And so, and obviously things aren't going as well as Putin thought they were going to go. And so maybe that speeds it up. But I think you see people kind of, maybe it will spark a rally. People see, oh, there might be something being worked out here, right? And so we'll see what happens. I mean, you cannot predict what Russia and Putin are going to do, but I do agree there has to be something to come to a head here, right, on that right there. And so the other thing I want to show you guys was, if you look at what's going on in this rally today, what I meant by was I've seen this movie not once but twice now, and it takes 3 times to make a pattern. So tomorrow will be the 3rd time. And so if this happens, we'll have a pattern. If not, then obviously there's no pattern. But if you look at the chart here, you can see obviously we're getting this huge rally today. I mean, it's just a massive rally. But you can see we're nowhere even close to that descending trend line, the channel we've been in for so long here. But if you look what happened last month when we got the CPI data. Had this massive run up, right? And then we get the CPI data, and then, oh my God, people flip, and you're like, oh my God, please let the pain stop. We've just been selling off forever, it feels like, right? After that, then you go back to January, same thing. Big run up, get the CPI data, and oh my God, make it stop. We end up selling off again, right? And so, we've seen this movie before, and here's what I'm talking about in this channel we've been in for, feels like forever, but it's just since the beginning of the year, as we go down. And until we break above this or break out of this, everything else is just noise, right? And it won't take much. I mean, that's the one thing I agree with this author in that article when he talked about was that growth stocks and small caps, and I've said this before and I'll say it a million times, they rally hard and fast, right? So when it does break out of that channel, you're going to see this massive run eventually. The institutions, and it's not going to be us that does it, the institutions will rotate in. It may not be a permanent push, but to get a nice rally, I'm showing you 2018's chart where they go up, and then all of a sudden something happens, whether it's 3 rate hikes, 5 rate hikes, something stupid, and then boom, sells off again. Okay, because we are, you have to face the fact we're going into a tightening cycle here. It had been a long time since we've done it, a few years. But the last time they tried it, it didn't go so well. And so, that's something we're going to have to look at. But when they go, right? You see today, I mean, you got some of these stocks have just been hammered. Like, for example, I saw Open Door, up 12% at one time. Everything's just been beat down. But guess what? Last time, the day before CPI data, it was up same amount, right? And then it sold off another, 30% or something after that. So, and if you look, another reason why this might be happening today is because you had commodities selling off like crazy. You can see right here with the numbers on the right-hand side there, and one of those is a fertilizer stock. It's very popular, been going up. But, oil went way down, fertilizer's down. You got corn, wheat's just getting hammered the last 48 hours. And so all those are going down, and what probably might be happening is you have traders taking profits, obviously, a lot of profits, congratulations, by the way, and rotating them into some of these beat down growth stocks and small caps and stuff like that. And this is what I was going to show you right here to finish this off is the death cross, right? So when the 50 goes below the 200 EMA, and I don't really like this one at all, but if you look at the last 2 or 3 times this has happened, you can see right here, what it really means is we're close to a bottom because it happens pretty fast. You see that big drop in that short amount of time, and then we go back to another time right here, and you can see the big drop. Both are about 14 to 20 days, right, before they hit the bottom. So to me, what the death cross signifies is we're just closer to a bottom than a top, really, right? Doesn't mean we're not going to drop further, sure, but you saw how quick those were. I mean, anywhere from 2 to 3 weeks, which is 10 to 15 trading days. We end up hitting the bottom, and most of those accelerated pretty fast. And so looking at that, yeah, I mean, could we go lower? Absolutely. But remember, a lot of stuff is baked in. A lot of stuff is priced in. The CPI data tomorrow, I told the members this morning when I sent out the news briefing, that, don't be surprised. A lot of people are expecting this gigantic number because of Russia and Ukraine, but don't forget, Russia didn't invade Ukraine until the 24th of February. It's only 28 days in February, so you had a couple trading days there, right, for that to be baked in. But everything started moving. Commodities and oil started moving in March. That's the CPI data. When we go into April and get the CPI data for March, that's the one that we should see a huge jump up on, right? Because I think we ended in February. I think oil was around 98. I think it popped from 92 to 98 in February. But then we busted from 100 to, 130 in the first 8 days or something like that. And then wheat and everything else followed right along with it. Fertilizer, lumber, and then, of course, remember, nickel, right? That didn't happen until this month either. So, that's the thing. The precious metals didn't start really rolling until March. And so it won't surprise me at all. If we just hit 7.8, which I think is what they're expecting tomorrow, or 7.9, I just feel like the market is just looking for this reason to rally. Now, if you come in tomorrow and the CPI data does come above that and the market wants to sell back off and roll back into oil and gold and everything else, obviously that could happen because this is a trader's market, right? The traders are pretty much running it. The algorithms are running it. But, you know, what to see, let me know in the comments what you think is going to happen when that data comes out tomorrow. And so we'll see. Let me know in the comments what you think. If you got anything out of it, hit the like, subscribe button. Really appreciate it. And I'll see you guys tomorrow.